Jeff Bezos sold $8.5 billion worth of Amazon stock in 9 trading days. 9 days. February 7th through February 21st, 2024. 50 million shares dumped on the market in concentrated selling that has no precedent in Amazon's history, not spread out over months, not gradual diversification. 9 days of relentless liquidation. This is the founder of Amazon, the man who built the company from garage to $2 trillion market cap, the man who owns more Amazon stock than anyone else. And he just sold $8.5 billion in 9 days. That's not portfolio rebalancing, that's exit velocity. Let me show you why this matters, what Bezos knows that you don't, and why the speed tells you everything about what's coming. Start with a historical context. Prior to 2019, Bezos never sold more than $3 billion worth of Amazon shares in an entire year. Sales were tied to funding Blue Origin, announced in advance through 10b5-1 trading plans, transparent, predictable, strategic. But 2024 was different. In February alone, $8.5 billion, nearly 3 times his previous annual record, in 9 trading days. February 7th, 12 million shares sold. February 8th, 12 million shares. February 9th, 12 million shares. 3 consecutive days, 36 million shares, approximately $6 billion liquidated. Then February 14th through 21st, another 14 million shares, $2.5 billion more. Total, 50 million shares, 8.5 billion 9 days. The speed is the signal. Slow selling suggests liquidity management or gradual diversification. Fast selling suggests urgency. They want out before something happens. And Bezos isn't just any insider. He's the founder. He has access to every piece of data Amazon generates. Customer behavior, AWS growth, advertising trends, operating margins, capital expenditure plans. He sees the business in real time with granularity analysts can only guess at. What he saw in early 2024 made him sell $8.5 billion in 9 days. That should concern you. Now the official explanation. Amazon and Bezos provided one. Sales were part of a pre-planned trading arrangement under Rule 10b5-1. Media reported it as routine diversification. Advisors called it smart tax management because Bezos moved from Washington state, capital gains tax, to Florida, no tax. Avoided an estimated $600 million in state taxes. All technically true, but missing the point. The question isn't, why did Bezos sell? The question is, why so much so fast? Why $8.5 billion in 9 days instead of $2 billion over a year? Why dump 50 million shares in a burst instead of dribbling them out over 12 months? The tax explanation doesn't hold up. If Bezos wanted to avoid Washington's tax, he could have moved to Florida and sold shares gradually over 5 years. There's no deadline. Tax savings don't disappear if you sell slowly. So why the urgency? Because Bezos sees something in Amazon's data that makes him want out now, not next quarter. Now, when someone with access to Amazon's internal metrics sells $8.5 billion in 9 days, you should pay attention. Let me show you what Bezos might be seeing by examining Amazon's recent earnings reports and operational trends in detail. Start with revenue growth and the concerning deceleration pattern. Amazon's revenue growth has been decelerating significantly. Q1 2023, 9% year-over-year growth. Q2 2023, 11%. Q3 2023, 13%. Q4 2023, 14%. That looks like acceleration. But Q1 2024, 13%. Q2 2024, 10%. The growth rate peaked and is now declining steadily. That's significant because Amazon's valuation is predicated on continued strong growth. At 50 times earnings, Amazon isn't priced as a mature, stable business. It's priced as a growth story with expanding margins. If growth stalls, the multiple collapses. Bezos knows this intimately, and the internal data he sees shows growth decelerating faster than the market realizes or expects. Second signal, AWS growth is slowing significantly. Amazon Web Services has been Amazon's profit engine. Operating margins in AWS are 30-35% compared to low single digits in retail. AWS has been growing 20-30% annually for years. But Q1 2024, 17% growth. Q2 2024, 19%. Still double digits, but the deceleration is clear. And AWS faces increasing competition from Microsoft Azure and Google Cloud. And the moat is narrowing. Third signal, capital expenditure is exploding. Amazon spent $48 billion on CapEx in 2023. That's data centers for AWS, fulfillment centers for retail, infrastructure for logistics. But the return on that CapEx is declining. Revenue per dollar of CapEx is falling. Amazon is spending more to generate less incremental revenue. That's not sustainable. Eventually, investors will demand better returns on invested capital. And when they do, Amazon stock gets repriced. Fourth signal, operating leverage is deteriorating. Amazon's operating margin in Q2 2024 was 10.7%. That's up from Q2 2023's 7.7%, which looks good. But the improvement came from cost cuts, layoffs, and efficiency initiatives, not from revenue growth. Amazon is cutting its way to profitability instead of growing its way there. That's a defensive posture. And it suggests the growth opportunities aren't as robust as they used to be. Bezos sees all of this. He sees revenue growth decelerating. He sees AWS slowing. He sees CapEx exploding without proportional returns. He sees operating margins improving only through cost cuts. And he decided that February 2024 was the time to liquidate $8.5 billion in 9 days. But there's another layer to this. Let me show you what Bezos did with the money, because that reveals his thinking about what's coming next. Bezos didn't reinvest the $8.5 billion back into stocks. He didn't buy a diversified portfolio of equities. He converted Amazon stock into cash. And he's holding that cash in short-term treasury bills and money market funds, earning 5%. Why would he do that if he thought stocks were going higher? He wouldn't. He's holding cash because he expects better opportunities at lower prices in the future. This is the same playbook as Warren Buffett. Sell high, hold cash, wait for the crash, buy low. Bezos is executing the same strategy. And when two of the richest people in the world are both liquidating stocks and holding cash, that's not a coincidence. That's coordination, not explicit coordination, but coordination through shared access to information that retail investors don't have. Now, let me show you the timing, because February 2024 was a specific moment in the market cycle. The S&P 500 was near all-time highs. Volatility was low. Sentiment was euphoric. AI hype was driving tech stocks higher. Everyone was bullish. And that's exactly when Bezos sold. He didn't wait for the market to correct. He didn't try to time the absolute top. He sold into strength, into liquidity, into a market that could absorb $8.5 billion of Amazon stock without crashing the price. That's what smart money does. They don't sell into weakness because there's no liquidity. They sell into strength when buyers are plentiful. And February 2024 provided that opportunity. Retail investors were piling into index funds. Passive flows were strong. The market could absorb massive selling without breaking. Bezos took advantage of that window. He dumped 50 million shares while the market was still willing to buy them. But here's what's terrifying. Bezos didn't file a new 10b5-1 plan for additional sales. That suggests he got out what he wanted to get out. He liquidated $8.5 billion, converted it to cash, and now he's waiting. Waiting for what? For the same thing Buffett is waiting for. A 30-40% market correction that makes stocks cheap again. And when that correction comes, Bezos will have $8.5 billion in dry powder to deploy. He'll buy Amazon at $120 instead of $180. He'll buy other stocks at 10, 12 times earnings instead of 20, 25 times. And when the market recovers, his $8.5 billion will become $12, $15 billion. That's the wealth transfer mechanism, from the late sellers to the early sellers, from the emotional investors to the disciplined ones. Now, let me connect this to the broader pattern of insider selling, because Bezos isn't alone. He's part of a coordinated exodus that includes Buffett, Gates, Zuckerberg, and Diamond. They're all selling stocks. They're all raising cash. They're all positioning defensively. And the combined selling exceeds $89 billion over 6 months. That's not random. That's a flight from risk. And the assets they're buying instead of stocks tell you what they're preparing for. Buffett is buying Berkshire Hathaway, which is essentially a cash proxy with optionality. Gates is buying Waste Management and Canadian National Railway, boring defensive assets that generate cash flow in any environment. Bezos is holding cash in treasury bills. These aren't growth plays. These are survival plays. They're positioning for a world where dividends matter more than growth, where cash flow matters more than momentum, where preservation matters more than speculation. The message is clear. The richest people on earth think stocks are overvalued. They think a correction is coming, and they're getting out before it starts. The speed of Bezos' sales, 9 days for $8.5 billion, tells you how urgent they think the situation is. This isn't leisurely diversification. This is panic selling disguised as portfolio management. Now let me show you what happens next, because the timeline is compressing. The billionaires have been selling for 6 months. The next wave of 13F filings covering Q4 2024 and Q1 2025 will show even more selling. And when retail investors see those filings, when the media finally reports on the magnitude of insider liquidation, confidence will crack. That's when the selling accelerates. That's when the correction becomes a crash. Phase 1, we're in it now. Insiders selling quietly. Retail buying, market near all-time highs. Volatility low, complacency high. The billionaires are liquidating while everyone else is buying. That's the setup. Phase 2, Q1. 2025. Cracks appear. A major company misses earnings badly. Maybe Amazon, maybe Tesla, maybe Microsoft. The miss triggers reassessment. If the leaders are struggling, what about everyone else? The S&P 500 pulls back 5%, then 10%. Volatility spikes. Margin calls start hitting. The media calls it a healthy correction, but the billionaires aren't buying. They're watching. Phase 3, Q2, 2025. The correction becomes a crash. The S&P 500 is down 20% from peak. Tech stocks down 30, 40% and recession declared. Earnings collapse, unemployment rises, consumer spending craters. And suddenly everyone realizes the billionaires were right. They sold at the top while everyone else is watching their portfolios implode. Phase 4, Q3, 2025 and beyond, the bottom. The S&P 500 down 30, 40% from peak, panic selling, forced liquidation. And that's when Bezos deploys his $8.5 billion. He buys Amazon at 50 cents on the dollar. He buys other stocks at distressed valuations. And when the market recovers in 2026 or 2027, Bezos will have added billions to his net worth while retail investors are still recovering from losses. That's the game. That's how wealth transfers happen. From the unprepared to the prepared. From the emotional to the disciplined. From those who ignore insider signals to those who pay attention. Now, let me show you what you should do, because understanding what's happening isn't enough. You have to act. First, recognize that Bezos' sale is a signal. When the founder of Amazon sells $8.5 billion in 9 days, he's telling you something. He's telling you the risk-reward at current prices doesn't justify staying fully invested. He's telling you it's time to raise cash. Second, assess your Amazon exposure specifically. If you own Amazon stock directly or through index funds, you're betting against Bezos' judgment. The man who built Amazon from nothing, who understands the business better than anyone, just sold $8.5 billion and you're holding. That's not investing, that's gambling. Third, follow the playbook the billionaires are using. Sell high, raise cash, wait for better prices. You don't need to sell everything, but moving from 95% stocks to 70, 75% stocks with 25, 30% cash gives you optionality. When stocks go on sale, you have buying power. When they don't, you're still participating in any upside. Fourth, avoid the trap of thinking you can time the exact top. Bezos didn't wait for Amazon to hit $200. He sold at $170, $180. He gave up potential upside to ensure he got out with liquidity. You should do the same. Don't try to squeeze the last 10% out of the bull market. Sell into strength while buyers are still plentiful. Fifth, prepare psychologically for what's coming. When the correction starts, the media will tell you to stay calm, stay invested, stay the course. Your financial advisor will cite historical data showing markets always recover, but the billionaires won't be staying invested. They'll be sitting on cash, waiting for the bottom. And you should be too. Jeff Bezos sold $8.5 billion of Amazon in 9 days. That's not portfolio management. That's a warning. The man who built Amazon sees something in the data that made him liquidate in a concentrated burst. The speed of the selling tells you everything you need to know about the urgency of the situation. When someone with Bezos' access to information sells that much that fast, the signal is clear. Get out before the crash. Raise cash, wait for better prices, and don't be the person holding Amazon at $170 when Bezos is buying it back at $100. The warning has been delivered. The question is whether you're listening.